Hello, welcome to the Real Estate Regroup Show. I am your host, LJ Walker, a real estate investor helping you realize your dream of owning a home or investing in one. Today's show, I'd like to talk about the recession. Many of you probably have heard, either through the news or going through a number of seminars, that the recession is coming. The recession is coming. Newsflash. It's always coming. You see, the economy works in cycles. It's normally up for 7 years and down for 7 years. It goes way back. If you read the book of Genesis, chapter 37, where it talks about the story of Joseph in Egypt, where he went through that already, and many other historical books that prove that this actually did happen, confirm this. Plus, if you read economic books, they'll also mention that historically the economy goes up for 7 years and then it goes down for 7 years. It always works in a cycle. Just like there's always a market correction that will happen in either September or October. Certain things like a recession is something that should be expected. Now, here's the thing, what many of you have to realize is that the news media and some of these gurus that you see in these seminars, they know that fear sells and fear also gets votes. Yes, politicians like to use fear as well. But try not to be too persuaded by what you hear, because most writers and even politicians, many of them are not investors, or they're really not the best at their craft when it comes to investing, and they're not economists either. Only a handful, maybe. So it's really important that before you read anybody's work, before you listen to any show, check out their education, their experience, who they work for, and what their motives are. You know, a lot of times, someone who has a lot of energy, who's really high strung, that attracts certain people, and that makes people think that they know what they're talking about. But actually, a number of them don't, to be quite honest with you. But they know that that's what's going to get you to watch them on TV or to listen to their radio show. What I say to you, the real question is, what are you going to do? What are you doing now? And what are you going to do when it comes? You see, preparation is key. You have to have, especially nowadays, a plan A, B, C, and D. And it's okay if you even have it all the way to X, Y, and Z. Not having a plan, now that's bad. There's something that I heard a long time ago from a fellow YouTuber named Kiana. She passed away. She said, if you stay ready, you don't ever have to get ready. And that is the key as far as how to stay afloat during a recession or during any economic period. Now, in my opinion, you've heard me say it before, I personally think it's coming in the year 2021, because we've been up for about 5 or going on 6 years right now. That doesn't mean that I'm right. It can always come a little bit earlier than that. You know, it's not that easy to predict the market, you see. But here are reasons why I do think that it is going to be coming. Coming a little bit sooner than later. Let me say that. I've noticed that the price of gold is going up, and gold always does good in a recession. I've seen where the government is outsourcing more, particularly with the flexible spending account, the agency that runs that. It used to be only in America, everything. Now, when it comes to the billing and proofing what you spend, that has actually been exported out of the country. Bankruptcy loans delinquencies have actually rose. The tariffs that have been raised on China and Mexico has actually made house flipping a lot more expensive. The products that were used to flip a house were definitely a lot cheaper about 4 years ago. So that is one of the reasons why I think that it's coming. Now, with the feds, with them not increasing interest rates as of yet, that's why I'm not really seeing it coming earlier. But I know that once they do, it will have an adverse effect on home ownership and the number of building permits that will be taken out. So what should you do now? I say the first thing you should do is take stock and take hold of what happened to you last time. When those of you who are old enough, that was in the recession, the last recession that we were in. Look at your personal history and look at what happened to you. Next, I would say talk to your CPA and come up with a tax strategy if you can. Talk to your benefits plan administrator on the job and have them go over your 401k. If you don't have a 401k on the job and you have an IRA, then I would speak to the administrator for your IRA with whatever company you chose to set that up in. You also should take advantage of financial advisors if you have one of your own, or if you're new to having a financial advisor, there are free ones that are available. In New York, we have them in the library. We have empowerment zones. You can also, if you're not in New York, visit greenpath.org, or another place is https:// N as in Nancy, C as in cold, A, D as in David, V as in victory.org/financial-education for recommendation of financial advisors that are free in your area. Next thing I would do now is I would try to pay off any debts that you have as much as possible. If you have a mortgage right now, I would try to pay it off or pay it down. Always add more money to the principal. Always. Taxes do go up, and yes, you can put money on escrow, and it's okay if you do that, but I say put it on the principal. Next, I would start to save money. Going back to the book of Genesis, I believe it was Joseph that was told to save 1/5 or 20% of everything that came in to the land of Egypt, so that when the drought occurred, they would be okay. Well, I say try to implement that within your own budget. I know most financial advisors will say save 10%, but if you can manage to save 20%, even if it's just for one time, like 1 month, I say go ahead and do so. And that'll definitely help you as far as building your emergency fund. Next, you want to sell whatever is not profitable or is just too much of a headache for you. Because you really, going through a recession, sometimes it can be somewhat tumultuous and you don't want any added burden. Next, for those of you who are investors, particularly those who are new, you want to reread your current market. Look at the population. Are people staying where they are in that particular city that you're invested in, or are they moving out? Jobs. Are jobs coming into that city that you're investing in, or are they moving out? Housing sales. How are housing sales doing in that area right now? Has housing sales increased or decreased? And then lastly, you want to look at the city plans. You don't have to go to the actual city and go to the city planning office, even though if you did, as a real estate investor, hopefully you have it under an LLC, you can deduct that price on your taxes as a business expense. But in case you don't have the time to do so, do realize that many city planning offices, many community boards are online. They do have a Facebook presence. They do live videos. You can also go on YouTube because there are other town halls that go live on YouTube every now and again. Sometimes every month, sometimes every week, whenever it is that they meet. So you want to definitely look at that to determine whether or not you want to keep the property that you have or you want to sell the property that you have. Now, let me tell you what areas are going to be hardest hit. Those that are being overbuilt. If you notice that the population is going down or the number of jobs is going down, but construction is rising, that area might be overbuilt during the recession and you might lose out. So you might consider selling. It's up to you. Okay? If you have invested in an area that's not inclusive, meaning that they tend to be racist or homophobic, then I'm going to let you know something. Studies have shown that areas where is not open to diversity, where it's monolithic, closed-minded, they're not as profitable as those that are open to it. Now, me, myself, as a Black woman, I'm going to tell you off the bat, I am not investing in any area that is not open to having a Black person move into it. I will not move into an area where, if I've heard reports where a Black person has been hurt, I'm not going to move into that area. So your pool as far as who you can sell that property to is going to be limited if you have invested in an area such as that. And of course, as mentioned before, let's also look a little bit more into the job situation. Me personally, I like not just a lot of jobs, but a lot of different industries. Meaning, let's say where you have invested, there's only one industry there. That is very dangerous, even in a recession. And I'm going to tell you why. Because if that industry gets hit, then all of the jobs will suffer. But if there's more than one industry in that town or in that city, then it's okay. Because when one closes, the other one will still make money. So you may want to just look at the jobs or the headquartered companies in that particular city. How did they do during the last recession? You also have to remember that there were a number of new companies that arose from the recession that we had last time. So their track record may not be on point, or it just may be hard to track their success or how they're going to do. And if you are in a place where there's a million startups and there's not enough companies that have stood the test of time, I would really think as far as whether or not it would be a good idea to stay there or to move on. Moving forward, me personally, I don't intend to buy a whole lot of properties right now unless the numbers are really, really good, because I don't want to over leverage myself. Next, many of you have already have known this if you listen to my previous broadcasts, getting a home equity loan. I've already pre-qualified a long time ago. I have not continued the process. I really need to get on ball with that. But now is definitely the time to get a home equity loan if you can. Why? Banks are stricter when it comes to lending during the recession than they are when times are good. And a long time ago, I would say maybe about 30 years ago, I went to the bank and they said to me, you know, it's always good to have a loan when you don't need it, or to get money when you don't need it than when you do need it. Because when you do need it, they're actually less likely to give you money. And if they do give you, they normally won't give you the amount that you want. They're going to give you less than what you want. There were 3 women in the bank that told me this a long time ago when I was in my 20s. And I never forget it. And the great thing with the home equity loan is you can go and you can apply for the loan, but you're not going to be responsible for paying the loan back until you actually use it. See, that was the part that I wasn't really all that clear about. You understand? Is that you can actually apply for a loan. That doesn't mean that you pay it back right away. You pay it back when you actually use the loan. So you can pre-qualify for the loan and then qualify for it, and then that money is just there. Now, a lot of times, though, that money will be there for a certain amount of time, though. That's the only thing. So you would have to use that loan money within a particular time period. But now is definitely a good time to get that home equity loan. The time period varies among banks, so definitely ask them that before you apply. Next, start a side hustle or business. Get that going, you know. The next thing that I recommend and have recommended before, get yourself a mentor or mentors with an S, and a mastermind group. Because you see, what's printed in the papers, a lot of times, as mentioned before, is not always written by someone who's actually an experienced investor. Sometimes some writers, I've seen this, where they'll come to a seminar, they'll come to the class, they don't always come on time, they'll come late, and they don't stay through it. They leave in the middle of the class. And there's like a whole chunk of information that was important that, you know, they didn't get because they weren't there. So this is why a mastermind group is great. And there's a ton of information that is not placed in real estate books. A ton of information that you will not learn when you are in class. The only way you are going to get that information is by actually being in the trenches and also observing other people who are in the trenches. So that's why I say go get yourself a mentor or mentors and belong to a mastermind group. Next, Treasury bond interest rates are looking pretty good, and that's a good place for investments as well. They offer some tax incentives. The next thing you may want to consider is selling your stocks, your bonds, mutual funds, ETFs, or incorporate dollar cost averaging if you have not done so already. Now let's look at the history. Let's go back to the history again. What tended to do good during the recessions are precious metal, in my opinion, didn't do that great during the last recession. Others, yeah. Pork, water did very well. A lot of consumer staples, and anything that dealt with repairing, maintenance, and renovation did very well. So companies that sold those type of services and products, they did well during the recession, or okay. So what do you do when it hits? Well, when you're in the stench of the recession, when you're like deep in the funk of it, you'll notice that the whole world will be on sale. So that actually is the best time to buy. Not to sell, to buy. As far as notes are concerned, it might be best to buy performing notes as opposed to non-performing notes. Because if you're dealing with a non-performing note, you may end up having to foreclose on that person, because maybe we don't know if the government funding that's here today is going to still be there during the recession to help people stay afloat. You don't know if their jobs or their businesses are going to pick up. So you may have to foreclose, which means that you may have to do a remote flip, unless you invest in your own state and city, and then you may have to sell it. Or, if you want to be a landlord, you can do that. You can also do Airbnb. But performing notes would probably be less headache on you. The next thing that you may want to look into is look for subject twos, take over people's mortgages. Look into short sale to prevent foreclosure. Foreclosure is the next area you want to, if you're interested in buying a home. And then there's tax liens as well. There probably will be more tax liens and tax deeds that you could pick up on than there is now. Because right now, many, not all, but in many places, getting a tax lien and a tax deed, you're competing with a whole lot of people with deep pockets. And a lot of times they are overbidding on those tax liens and tax deeds. So, and then there's not that many right now as compared to when there was a recession. So that is my advice to you. And of course, remember, in order to help you save, definitely get coupons. Okay? So folks, that's all I have for you tonight. I just want to let me preface this to say, before going though, I myself am not an economist or a financial advisor. I have taken economic, finance, and accounting courses at Fordham University back in 1989. I am a member of a number of mastermind groups, both on the internet and off the internet, where I do get financial advice from. And I encourage you to do the same. You can find those that are free. Now, I'll mention this. The free ones will give you value, but the ones that you pay for normally give you a little bit more value. So just keep that in mind. Anyway, I'm just sharing the little bit of information that I have as far as my experience during the last two recessions, and then the inflation period that I also had been through many, many, many years ago. So anyway, I just wanted to give you some things to think about. Please feel free to share this, pass this along. Remember, I do copy my broadcast and I put it on my YouTube channel called Real Estate and Recreation. Feel free to visit that. Until next time, stay blessed and have a good night. Bye.